Welcome, Stephen Rothstein of Ceres. Stephen is the Managing Director of the Ceres Accelerator for Sustainable Capital Markets. Stephen, it's good to see you again, and we're glad that you're here at GreenFin 24. Tell us what you're finding out this week.
Great to see you, and appreciate, as always, GreenFin's organization and all the lots of different people they bring together. People are excited. There's a lot of positivity, despite a lot of challenges that we're seeing in the environment in terms of some of the anti-ESG. So there's a lot of leaders, both in companies and investors and NGOs, and it's great to be here with so many people.
Stephen, give us just a little bit of background on Ceres and how your group within Ceres is focused on sustainable capital markets.
Sure. So Ceres is a nonprofit organization, been around for 35 years. We have a few hundred employees. We do a number of things. First, we represent investors. Our investor network is about $45 trillion of assets under management. We work with some of the largest companies, policies, and regulators. And Ceres overall is trying to move business to become more sustainable. We fundamentally believe that the more companies think about climate risk, they're thinking about their own sustainability financially and vice versa. Climate risk is financial risk. I focus particularly in the financial sector, so banks, insurance, investors, and all the regulatory agencies, the SEC, Federal Reserve, and all the state agencies, and we've seen a lot of progress.
That's good. Tell us a little bit about the progress that you're seeing within the corporate sector.
Yeah, so there are more, while there is a lot of pushback on what people are saying, it's not affecting so much what people are doing, meaning there are companies that are making multi-million dollar or billion-dollar expenditures in converting their plant and equipment. There are more companies that are setting net zero targets. There are more investors that are doing that than ever before. People understand that climate is a growing risk, the number of hurricanes and floods and fires and transition. So the risk is there. There's also enormous opportunity between the IRA and other kind of business opportunities. So they understand the risks, they understand the opportunities, and they're making change. Now, from our perspective, it's not fast enough because of the crisis we're in, but they are making changes.
And what do you see unfolding in this very large arena that Ceres covers over the next, or the second half of this year, for example?
There is this little thing called an election that some people are waiting for to see what's happening. But there are what I call kind of no regret strategy, meaning that are important to go either way. So that we're moving forward on new legislation at state level and new regulations for legislation that have gone through. There's regulatory elements at the federal level. There's the further of distributing funds from the IRA, working with companies and regulators and investors on those areas. And we're seeing more and more activity. We're also seeing there's a waning at the state level. So there's been about 129 bills that were killed that were anti-ESG bills. Only 5 were passed. So that's showing greater interest. And then we're seeing an industry we're seeing more and more interest in. It's still a lot to do, is the insurance industry.
Yes, could you just say 30 seconds about what's happening in the insurance industry related to all of the sustainability focus that we're here to find out about?
Sure. So first is the insurance industry is ahead of other industries in disclosure. That for the last 2 years, they have been disclosing their TCFD climate disclosure. So now 80% of the insurance industry are doing that. And there are some great pilots out there of sustainability, of resilience, but we need to step it up a lot more.
Okay. And what is Ceres doing to be part of that process and move that forward?
Yeah, so Ceres is working closely with regulators, their national association called the National Association of Insurance Commissioners, and insurers. We did a panel here at GreenFin and brought some folks together and try to highlight some best practices and take those pilots and scale them up.
Great. Well, Stephen, thank you so much for joining us today. Full disclosure, Ceres was a sponsor of the Sustainable Finance Podcast in the past and helped us get launched, and we really appreciate that opportunity to work together. And Stephen, enjoy the rest of the conference.
Thank you. You always do a great job. Thanks, Paul.